meet out there for global investors. For the time being, let's get back to markets. And one stock that's getting a hard knock today is LIC Housing Finance. It delivered a lackluster set of numbers in Q2. It was a sequentially weak quarter for the company. Net interest income slid by close to 30%. Let's bring in their MD and CEO, Mr. Viswanatha Gowd, to understand what weighed on the performance in the past quarter. Hi, sir. Thanks so much for joining in. Well, you surprised everyone on the downside, but your commentary is going to be even more important now. Your NIMs came down, sir, by around 60-70 basis points on a sequential basis, though your cost of borrowing went up by only around 30 basis points on a sequential basis. What is the steady state NIMs we should be working with, and why was there such a sharp contraction in the past quarter?
If you look at what you call the Q2 performance overall, actually our disbursements are very good on higher side. Disbursement was very robust also, even quarter over quarter, even compared to last year. Apart from that, what happened, the cost of borrowings, of course, have gone up. That is across the industry. Along with that, we do have to pay. That is there on our borrowings. Then if you look at the loan book size also, there is an expansion on the total portfolio also. Then over a period of last year, if you see what is called the cost of actually funds also have gone up. Then the net interest margin.
Yeah. Mr. Gowd? Yeah, Mr. Gowd, with regard to the disbursements and the loan growth, we'll get to that in just a bit. I think you were getting to the NIMs part. So tell us why the NIMs disappointed in the past quarter. Cost of borrowings has gone up for the industry, yes. The problem is, is likely to stay elevated. So what is the guidance you want to give us with NIMs? Go ahead.
As far as the NIMs are concerned, we are very confident that in the quarters to come, there will be definitely an improvement beyond what we are now have planned also. Then across what you call the loan book size also now, what you call the interest rates will be passed on in the Q3. What are the rate hike is there, that will definitely will be getting effect into that. With that, the net interest income will have good margin. Then what we have guided earlier also, it will be more than 2% across also, even NIMs will work out. And we are having very good systems in place. Even the digital journey is also now in a very big lead with all the processes kept in place. And we are very confident that the coming 2 quarters will be having very stellar performance.
Okay. NIMs will improve to 2%, sir. I just want to clear that number.
Which one, sir?
NIMs will improve to 2%, you're saying, for the coming 2 quarters?
No, NIMs will go up. Now, for the time being, it is hovering around. Actually, earlier it was around 2% to 2.3% range was there.
Yeah.
Now, for the half year, it will be around more than 2.1%. So it will around same percentage will maintain more or less. Or it may go up to 2.3%.
Okay. Your overall credit costs have remained elevated this quarter, sir. Just give us a sense in terms of what the write-offs were this quarter. What are you guiding for?
As the write-offs are concerned, only a small portion was taken care, around 100 crores plus. Then actually now the NPA portion also slightly better compared to the earlier quarters. There are some reduction also in the total volumes. Then going forward, both in the developer book and also as well as the individual loan book, we will have very good improvement in our NPAs. And we're very sure that the credit cost will be around 45 to 50 basis points analyzed. That's what we are looking at.
Okay, so credit cost will be 45 to 50 basis points. I just want to, break up a little more in terms of the asset quality when it comes to your developer loan book. What was it this quarter as compared to the previous quarter? And similarly for the individual segment as well. What are you guiding for?
Developer book, if you see, actually there was a contraction, I agree, because after pandemic there was a slowdown. Then again, slowly, our loan book says also in the developer front was not that much earlier. It was less than 5%. But what happened now, of course, in this quarter, there is a small contraction. One plus point is now we are also focusing our business operations in the project finance across the country in all areas. So we are very sure that there will be a growth again than the earlier years, even in the disbursements in the developer book also. Then I think now the stage 3 has got reduced by 800 crores in the retail as of now. Then again, if you look at the builder loan also, it has contracted by 700 crores over.
Okay, all right, Mr. Gowd, we have got your credit cost guidance, 45 to around 50 bips odd. What about asset quality? Your gross NPAs were around 4.9% in the past quarter. And I think net NPAs calculated is around 2.8%. So what's the guidance on that front? Give us a sense on the asset quality. And also you have been talking about loan growth, right? What are you guiding for in FY23?
Yes, as far as the GNPA levels are concerned, certainly there will be an improvement from this stage. It is slightly compared to earlier quarter, it has come down by a few basis points. Then going forward here, with all the systems in place and teams working across, we are very sure that the GNPA position will certainly improve quarter after quarter. And at the end of the year, I think it will be far, far better than in the earlier quarter, certainly.
Okay.
Both in retail as well as developer book.
Okay.
And then,
Go ahead, sir.
Go ahead, sir.
then looking at the other, what you call...
Loan book, sir. Loan growth. Go ahead.
Yeah, loan book growth. Loan book growth is concerned now, we are very optimistic that the growth is around 15%. Then in the coming 2 quarters also, the demand is robust. And we are very sure and confident that we will be showing a growth of minimum 15% for the whole year.
Sir, just a quick last question before we wrap this up. What has, probably disappointed the street is the kind of decline that we've seen on a Q-on-Q basis when it comes to the NII as well as the profitability. So do you have visibility to guide us about just Q3, that whether or not there is going to be a sequential stability in the numbers or a recovery when we talk about LIC Housing Finance when they probably report Q3? What are the trends that you're seeing at this point?
Yes. Actually, coming quarter, the Q3, we are very optimistic with all the targets set for the people down the line for both our disbursements and also the recovery. I am very sure that the results for the Q3 should be far, far better than the current one on all fronts. Then especially if you look at what you call now, even the benefit, what you are repriced for the entire loan book is also effective from the first quarter, normally because we take the quarterly reset. So with that, this quarter, we should have very good income, and also the NPA levels will be coming down. With this, the Q3 should be far, far the best quarter in the entire year.
Oh, okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. I'm sure we'll probably touch base with you as the quarter goes on. So LIC Housing Finance confident about a Q-on-Q recovery in terms of numbers. As of today, disappointment. The stock is down around 10% reacting to what has been a disappointment in terms of the NII, which is down around close to 30% on a Q-on-Q basis. OPEX is higher, net interest margins lower this quarter. Take a short break. On the other side, a detailed chat with the management of UPL.